What is up, everybody? Back at you again with another earnings recap, and in this video I'm going to be going over a very key stock here in Canada. In fact, it's one of the most successful stocks in Canadian history, and actually one I have a soft spot for overall, just because this was the first ever highlighted stock for our Stocktrades premium platform when we launched it back in 2018. So it is a company that I've followed pretty aggressively over the last while. I used to own it. I ended up selling it during the COVID-19 pandemic when I thought valuations ran up a bit too much, but it's definitely one that I still do follow quite a bit, and that is Shopify. They reported a outstanding quarter. They've been reporting strong quarters for 2-3 quarters now, and there's certainly a turnaround in the economic environment, Shopify's target market, that is causing some vaulted results, along with the fact that the company just continues to innovate, find a way to make more people stick with its subscriptions, with their online businesses, things like that. So I'm going to dive into the quarter, into the company overall, kind of give an explanation of what they do, why it's so key, and just cover the earnings and cover the company as a whole. As always, everybody, down in the description, there is a free report to 3 stocks that I really like in 2024 and 2025. They're directly from our premium platform. They're available to you absolutely free, just down in the description below. But let's jump right into the video. So when we look to Shopify on a headline basis, we can head here and we can see that revenue of $3 billion came in, ahead of $2.94 billion expectations. They don't have adjusted earnings estimates here. They reported around 28 US cents per share. So this would be, if we take currency exchange, this would be a slight beat on earnings as well. So the quarter came in relatively in line, but we can see some significant growth from the company along with operating margin expansion, which is ultimately leading to higher free cash flows. So when we look to gross merchandise volume, it came in at $69,715,000,000. This is a pretty notable increase from the $56 billion it reported in the third quarter of last year. And when we look to monthly recurring revenue, $175 million, whereas last year was at around $137 million. So overall revenues are up quite a bit on a year-over-year basis. And when we look to free cash flows, they're up probably, looks to be around $150 million. So this is a pretty notable, more than 50% increase year over year in terms of free cash flow generation. And when we look to year over year revenue growth, we're sitting at 26% year over year, whereas last year was 25%. So really the bulk of the free cash flow generation is coming from an expanded free cash flow margin. Now, when we look to Shopify's business overall, it has 2 core segments, that being its subscription solutions and its merchant solutions. So what the subscription solutions end of the business does is it allows merchants, whether it be small businesses, major businesses, to charge auto build subscriptions for particular products. So the one thing right off the top of my head I can think of is if you are a coffee company and you want somebody to automatically sign up to get routine deliveries of coffee, you can do this through the platform. It allows you to set up, auto build subscriptions. It allows, customer flexibility to the point where they can log into the Shopify platform. They can pause, skip, cancel the subscriptions. It allows you to offer various discounts on particular products, whatever you want to add. And then on the merchant solution side of things, this can include things like Shopify Payments, which is pretty much a payment gateway that allows merchants to accept various payment methods, including, credit cards, digital wallets, etc., without the need for any, added third-party operations. They also have a point of sale system that would allow, people to process transactions at physical stores. So it's not necessarily just a solely, online dedicated store. And those are going to be the 2 key drivers of the business, and as a result we're going to get 2 key performance metrics from these 2 segments. And the first thing I want to talk about is the gross merchandise volume. So GMV pretty much tells you the total dollar value of all orders processed through Shopify's platform. So this is regardless of whether Shopify processed the payment or not. And what we can see here when we go to the FinChat KPIs is we can see a gradual increase of gross merchandise volume. This is a very good sign. It not only means that more merchants are coming to the platform, but it means that Shopify is processing more transactions. And one of the prime reasons you see here for the spike in the end of year GMV, this would obviously be the Christmas element side of things. Obviously, people are going to spend more during that time, during the holiday season. Obviously, we're pretty spend happy during that period. So this is why you tend to see those big spikes and then the drop-offs. The one thing we can see here is that gross merchandise volume during 2022, this company went through a relatively rough period where effectively gross merchandise volume actually fell. We can see here from June 2022 to September 2022, it went from 46 billion, around 47 billion, down to about 46.1 billion. What happened in 2022? Interest rates started rising. People, small businesses, whether it was maybe lockdown conditions that caused them to kind of head back to their physical stores, whereas during lockdowns, they would have been, heavily reliant on something like Shopify, and overall just a downgrade in, total consumer spending. We can see that in 2023 as well. They went from 55 billion in June of 2023 to just 56 in September. But now we can see that growth is really starting to accelerate again coming out of this year. We can see gross merchandise volume in March of 2024, 60.9 billion, 67.24 billion in June, and now we sit with its most recent quarter, 69.7 billion. So this is a very important metric to track from the company, and it is on the right track in terms of just continually growing the platform, the amount of transactions that are processed through Shopify. Now, the next KPI I want to go over is gross payments volume. So this is a different KPI for Shopify because gross payments volume is the total dollar value of all orders specifically through Shopify Payments, which is Shopify's integrated processing service. So let's say their gross merchandise volume, somebody could use something like Stripe, something like that. With Shopify Payments, you are using Shopify's payment processor, so they ultimately get the fees from this transaction. If we go back to gross merchandise volume, 69.7 billion. If we go to gross payments volume, 42.9 billion. So effectively what this is saying is 42.9 billion of Shopify's 69.7 billion is processed through Shopify Payments. And the one thing we can see here is if we go back to December of 2021, we can see gross payments volume of 27 billion 700. If we go back to the gross merchandise volume, we can see 54.1 billion. That's about 50% of Shopify's GMV being processed through Shopify Payments. When we go back to now, we can see 42.9 billion and we can see 69.7 billion. That means that Shopify Payments processed around 61% of gross merchandise volume. Now, why is this key? Well, obviously, Shopify is getting the fees from processing these transactions. So the next KPI I want to go over for the company is its attach rate. So what exactly is the attach rate? This would pretty much represent the percentage of merchants on Shopify who use additional Shopify services beyond the just overall basic subscription plan to operate a store. So these can include things like Shopify Payments, which would be, again, I've mentioned it over and over again, their payment platform. It could be Shopify Capital, which actually provides lending options to merchants. It could be Shopify Shipping, which allows, fulfillment situations, or it could be their point of sale, which would be your physical location. So what you want to see from this metric is for it to keep trending upwards. So effectively, what this is saying right now is 3.1% of Shopify merchants are not only buying the basic subscription, but they're also utilizing other subscriptions on the platform, which kind of has an compounding impact on overall earnings. What this effectively means is that not only are they paying more to utilize Shopify, but they're also adding a lot of flexibility in terms of different applications that Shopify has that will make the subscription service a bit more sticky, I should say. So they're finding more value over and above just operating the store with Shopify. Maybe they're finding the payment gateway and the fulfillment operations better. It's going to be very hard for them to effectively leave the platform, which creates kind of high switching costs and overall lower churn rates, which ultimately is good for Shopify moving forward. Now, if we go back to the overall revenue makeup of the company, the bulk of it is going to come from merchant solutions, which again is that point of sale system, the Shopify Payments, the fulfillment, things like that. The subscription service is a relatively small portion of the business. It looks like it makes up, just over 25% of overall revenue. And overall, the merchant solutions is a much faster faster growing segment of the business. But as we can see, cost of goods sold, the subscription solutions is also a much higher margin business. We can see, revenues of $610 million, whereas they only cost $108 million in expenses, whereas merchant solutions, $1.5 billion in revenue to $936 million in expenses. So obviously the subscription end of things is much more profitable, but the merchant solutions is definitely, where people are finding more value. And obviously, that's going to be the situation where most businesses find the use case of it. Again, point of sale, payments, things like that. They're going to find more use case with that. But ultimately, at this point in time, Shopify is certainly firing on all cylinders. They've had a few great quarters after a pretty rough, I would say, 2023. And the one thing is, if we look to the final KPI I'll go over, which is monthly recurring revenue, MRR is a very important KPI for any subscription business you can think of. And when we look to the company's total MRR, it comes in at $175 million. So this is effectively what they're earning on a monthly recurring basis from subscriptions, automatically renewing subscriptions, things like that. And we can see since 2019, they have reported a 28% CAGR on these metrics. And as you can see, it's actually started to accelerate as we, exited the pandemic. You can see $107 million in September of 2022 up to $175 million in September 2024. So this is a very good sign for the business. And obviously, we can just look to overall, gross merchandise volume. We can see that activity is starting to pick up. 69.7 billion September 2024, 56 billion September 2023. This is big year-over-year growth. And as a result, the company issued its outlook for the final quarter of the year, and they expect revenues to grow at a mid to high 20% range. That would be around what it grew this quarter. Maybe if they hit the high end of things, that will obviously be higher than the 25% they reported this year. They expect gross profits to grow relatively at the same pace as last year, and operating expenses as a percentage of revenue to be around 32 to 33%, and free cash flow margins to be similar to Q4 2023. If we actually go and look at the company's free cash flow generation, we can see that effectively during its IPO, this was a cash flow negative company. Obviously, they're, expanding heavily. They're going to be free cash flow negative. And then during the pandemic, they saw a big spike in overall free cash flows. And ultimately that dipped down as, the bear market entered, people started scaling back spending in terms of rising interest rates. But when we head into 2024, we can see a notable uptick in free cash flows. They're talking, if we look to September 2023, 734 million. Fast forward till now, 1.749 billion. So the company is profitable, and they've to the point hit where they've achieved double-digit returns on invested capital and double-digit returns on equity. This company, obviously, with it being a growth-fueled company, had negative returns on invested capital for a very long time, but now it has really turned things around. And another key highlight of the company is operating margins. This company operated negatively during the slowdown in spending, the rising interest rates over 2022 to 2023. We're starting to see operating margin recovery, and if we go to September of 2023, negative 8% operating margins, and now we're sitting at 9.5%. So obviously this is a notable improvement, something that is going to directly impact the bottom line. So what many people have been asking me right now is Shopify a buy at this point? And if we go to valuations, we're going to see very expensive trailing valuations. We see 115 times trailing 12-month cash flows, and we see 116 times earnings. Now, one thing that is going to be important about this price to free cash flow is the company went through a bit of struggles, as I mentioned, in 2023. We're still catching the back half of 2023 in terms of free cash flow generation. And if we go to the numbers again, we can see that in the latter half of 2023, they were only, generating 167 million in free cash flow. So those numbers are likely a bit inflated right now just because it's on a trailing basis. Moving forward, the company is no doubt expensive, but these trailing numbers, they don't really give the full picture. Now, if we go down to something like enterprise value to revenue, which is kind of how I value these companies, especially faster growing companies, I do like EV sales and I do like EV free cash flow, but EV sales is going to be one of the main metrics I do use for a fast growing company. And we're seeing 19.23x, whereas, 5-year median averages are around 14. So this company is, on a trailing basis, on a historical basis, relatively expensive right now. There's no doubt about it. However, with the growth it's reporting right now, the market market is likely going to be willing to pay a little bit higher of a multiple just because, as interest rates continue to decline, the health of, small to medium-sized businesses improves. I could see some added tailwinds in terms of its overall volumes, its overall subscriptions, more businesses moving to the platform, international expansion as it becomes more free cash flow positive. It's going to be able to lay out a ton more capital expenditures to continue to grow. The company continues to develop new subscriptions, new applications, new effectively use cases for businesses that are causing it to become extremely sticky. And overall, I would view the company has a bit expensive right now, but one that could certainly grow into its valuation. I mean, if this company can grow free cash flow in line with its revenue, and I would argue that free cash flow is likely to grow faster than its revenue just because of the operational efficiencies the company's putting in place right now. As we can see, that operating margin expansion, that's certainly helping things out. There is a chance that if it grows revenue in the 20 to 29% range on a yearly basis, it could grow free cash flow at more than that. And ultimately, that is what the markets will want to see. They do value free cash flows. Stocks trade on their earnings. They trade on their free cash flow generation. Overall, it was a really strong quarter. I would probably expect more strong quarters from Shopify moving forward. It's a tad expensive at this point in time, but ultimately, I think over the long term, I don't think you would be upset adding this company right now, especially if it continues this trajectory of growth moving forward and fast expansion. I could certainly see it growing into its high valuation at this point. That's it for the video, everybody. As always, head down below, like the video, subscribe to the channel. Let me know down below what you want me to go over next. And as always, 3 free stock picks in the description. This is my own research I've done on 3 opportunities that I pulled directly from our premium platform, and you can grab it absolutely free in the description. And I'll see you next time for more great Canadian content.